So I got this question that says, I'm using QuickBooks Online Plus and I run a used car dealership. When I purchase some of the vehicles, I have a specific cost, but then I have some additional expenses such as repairs, new tires, etc., that I need to add to the cost of that vehicle. And I want that vehicle's new inventory to reflect in my books correctly. How do I do this? Okay. So I've actually got multiple clients that I worked with in this specific scenario. Used car dealers are a good example. I got some antique dealers that they do the same thing. They purchase a piece of antique and then they add a bunch of cost to it, labor, parts, paint, whatever. And then they want to enter the new complete cost of the unit into inventory. Now, whether you're using QuickBooks Online or QuickBooks Desktop, there's no built-in easy mechanism to do this, but I'm going to walk you through how I help my clients set up these types of process. So I'm going to go ahead and show you this in QuickBooks Online. Although if you're using QuickBooks Desktop, the system should be very, very similar. The buttons will look different, but the process is exactly the same. So let's start with the first transaction. The first transaction is the purchase of that raw material, of that used car, of that antique, whatever it is, which is going to be the first purchase. So for that, we enter a bill, a check, an expense like normal. So I'm going to click on the new button here. I'm going to go to check. And I'm going to check to Carlos Lopez. Let's say I'm buying the used car from Carlos Lopez. And there's going to be a couple of ways of doing this. So I'm going to show you the first method, which is using a WIP account, a work in process account. And then I'm going to show you the second method, which is using an inventory item. So right now we're going to start with the first method, which will be the WIP account. So we're going to create a new account called work in progress. So I'm going to go to add new. This is going to be a other current asset. I'll pick on that. And I can pick, let's just pick inventory. And then here we're going to call this one WIP. I'm just going to call it WIP. Simple, easy. Let's just call it WIP. And click on save and close. There we go. So I got a WIP account, a work in process account into my other current asset account. Then I have to create a sub account for each of the vehicles or the antiques or whatever it is that you're buying. Into that WIP account, I have to create a sub account for each one because it's the only way really to keep control of it. So I'm going to go into WIP and I'm going to hit colon, which basically is prompting to create a new account. And then I'm going to type, let's say this is a Chevy Tahoe 2006. So I'm just going to call it Chevy Tahoe 2006. I probably want to use maybe the last 4 digits of the VIN number or something as an additional identifier because, there might be a situation where I buy two Chevy Tahoes 2006. So I'm going to click on add and I will type in the account name. Then I have to make sure the account type it's an other current asset. And then this is a sub account. I'm going to click sub account. So I'm going to click on that checkbox, sub account of WIP. Now this detail type is not really important, but if I really want to be consistent, I can put it on inventory, just like the other one. Let me just copy the name just in case it gets changed, because it happens sometimes. So I'm going to do that and then just make sure the name's there. Sub account of WIP. I don't need to do anything here for beginning balance. We can ignore that completely. And then we can click on save and close. So perfect. I got my WIP account and my sub account, Chevy Tahoe. So let's call this one purchase. Okay, purchase or trade in, whatever. And then let's say, for example, this was $5,000. So that's it. One entry. This is my purchase from Carlos, who sold me the used Chevy Tahoe. I'll go ahead and click on save and close. That transaction is entered now. Now I can go into my reports and then go into balance sheet. And I should see, let me do here for dates. Let me put all dates for a minute. Click on report. And I should be on WIP Chevy Tahoe $5,000. So that balance sheet is now showing me the actual value of that unit that's not ready to sell. It's a work in progress unit. So I'm going to go ahead and duplicate the tab up here so I can continue doing the next transaction. So let's say that now I'm going to buy some parts. So I'm going to go click on new and then click on check. And let's say we're going to pay GM, General Motors, and we're going to go ahead and write them a check for some parts. So we'll put here a new alternator and mud flaps, whatever is it that I'm buying. Category, I'm going to go into WIP, and I'm going to use the same sub account I created earlier. So I already created the account. I don't have to create it again. I just have to choose it as that WIP category. And let's say that's $203.50. I'm going to click Save and Close. And now let's say we brought in an external mechanic that's going to charge us $500 to install the whole thing. So let's do another check here. And this concept works with a bill or an expense. I'm just using check to simplify the process. I'm going to go to check, and then I'm going to pay, let's say Robert Stevens, who's my contractor, and I'm going to choose the WIP Chevy Tahoe account. And let me just close this thing on the right side. I'm going to choose that. On the description, I'm going to put labor, and let's say charge was $500, and I'm going to click Save and Close. So I got my two charges, my parts and my labor on top of the original charge. I'm going to run the report, so refresh the report, and now I see exactly how much money I have invested in my Chevy Tahoe. Now the next step afterwards is, once we're done spending all the money on that product that we're supposed to spend, now I'm going to turn that into inventory. So this is kind of the tricky part. So I have to create a new inventory part to take the money away from WIP and put it into inventory. Let me show you how I do it. So I'm going to just copy the name of the account there. So I'm going to paste it later on. Then I'm going to create a new transaction, and I'm going to create a bill. I like using a bill, but an expense or a check works the same. I'm going to use a bill, and under vendor, we're going to call it WIP to inventory. So I'm basically making up a vendor name called WIP to inventory, which makes it pretty obvious that this is not a real transaction. Then I'm going to click on the drop down menu, and where it says item details, I'm going to create a new inventory part. I'm going to go to add new, and then select inventory. Obviously you need to have QuickBooks Online Plus or Advanced to be able to have inventory turned on. If you're working with QuickBooks Online Simple Start or Essentials, this is not going to work. So you have to be on Plus or Advanced to have the inventory feature. If you're working in QuickBooks Desktop, all QuickBooks Desktop has inventory, so you would just follow the workflow. And the name of this item, I'm going to use the exact same name that I used for the sub item in the balance sheet. And then under here, I'm going to put inventory asset account. I'm just going to leave that all there. So inventory asset, income account, sales of product, expense account, cost of goods sold. I'm going to leave it as is. I'm actually not worried about that at all. So I'll just keep the default income, asset, and cost of goods sold accounts. The really important thing is the name of the item. Now, where it says initial quantity on hand, this is where you want to resist the urge of entering anything in here. Don't enter anything of value here. I'm going to put 0, and then as of date, I'll put maybe today's date, whatever today's date is. I'll bring it back one day actually, because I'm going to use the bill on the 30th. So I'm going to bring it back to the 29th. And then here I don't have to put anything on the reorder point. So I'm going to go ahead and click on Save and Close. And now my item is created. So what I'm doing now is I'm transferring the value that's sitting on my balance sheet into my item. Now let me go back to my balance sheet real quick here. Click on Run Report. And there it is. I have to make sure that I know exactly what I'm looking at. So there's my unit price, which is 5703.50. And I'm going to go ahead and create the bill on the 30th. And then under quantity, I'll put there 5703.50. So I'm entering here where it says rate. Now, because this is a bill that I'm never going to pay, this is not really a vendor that I'm paying, I need to reverse this total amount against that WIP account. So I'll just type here WIP, and I select my sub account for my Chevy Tahoe. And then under amount, I'm going to put negative 5703.50. So essentially what I'm doing is I'm transferring the value of WIP, work in process, and putting it into the item value. So I'm going to go ahead and click on Save and Close, and that should do it. Let me go back into my balance sheet, and I'm going to click on Refresh or Run Report. I want to see if my inventory value under WIP is there. It's no longer there. Look, it is 0. And now that moved over to asset value. Now, the important thing of having an asset value, I think the valuable part, is to be able to run an inventory report. So when I go into reports, I'm going to search here for inventory valuation summary. my favorite report. And that's going to give me all the units that I have. Let me put tomorrow's date on it. Click on run, and then it'll give me all the items that I have in my system, the quantity, and the asset value. And then the really cool thing about having an inventory is then when you go sell it, so I'm going to go to new here, invoice. And let's say I have some new customer that walked in and wants to buy this from me. So I'm going to put this, let's say on the 31st. Then I pick the item. So I put here my Chevy Tahoe. And then let's say I'm going to sell this for $9,000. Whoops, quantity is supposed to be 1 and rate 9,000. And then I click on save. So assuming I get paid now, then I'm going to close this out, and it no longer shows up in my inventory. Now when I go into reports and I go here into sales, I can do a sales by product summary, and I'm going to have all my sales of products. Let me just put all dates here. Click on run report. I'm going to have all my sales of the products. I have the amount that I sold it for. I have my cost and my margin. So it's a real valuable piece of using this whole process. Now, usually when I get to this point, people will ask me an additional question. They ask me a question like, what about labor, internal labor? I didn't pay a subcontractor. I used one of my employees to repair the product or add some value to the product, and I want to include that in the value as well. Now that becomes a little bit more complex because there isn't a specific transaction in which we're extracting the value from. So in that case, we have to take the value away from our payroll expenses. So I'm going to go back to the profit and loss real quick and just show you first what my profit and loss looks like for this year before we jump in and do that part. So for example, this is what profit and loss looks like. See, I don't have any payroll expenses, so you would have to have payroll expenses first. So I'm just going to create a payroll expenses transaction just to illustrate this. So let's say, for example, that my total payroll, let's say I pay ADP for payroll, and the total payroll expenses, do I even have that account? I don't. So let's do payroll expenses, go to add payroll, and then click on save and close. So let's say the total payroll was $10,000. That's how much I paid in payroll for the month, the whole payroll. So I'm gonna click save and close, and then I go back to my profit and loss. Let me do this year again, and see that my payroll expense for $10,000 is sitting there. So now I want to take, let's say for example, an average of $15 an hour, 7 hours of one of my employees, and add that to the value of the product. So the way we would do that is we go back into that bill, which is the bill that we created, and then we're gonna increase the value of that product by the labor. So I'm going to go into category and type payroll expenses. And I would recommend, because I'm taking it away from a payroll category, to create a subcategory and call it allocated labor costs. So I'm creating a sub account called allocated labor costs as a sub account of payroll. And the reason for that is just to make it easier to see when I look at my report. I'm going to select here payroll expenses somewhere. So I have its own account called allocated payroll sub account of payroll expenses. And I click save and close. And then in here, then I do my calculation. So let's say, for example, that was 7.5 hours of an employee of $15 an hour. It's 112.50. So I'm going to put that as a negative. And then I can put here Mike 7.5 hours or whatever, right? So whatever notes you want to put in there to make sense of it. Then I have to go in here and I have to increase that rate by the 112.50 that I added in that in the account portion of that bill. So let me add 112.50, and now my bill goes back at 0. All my bills for WIP to inventory vendor should always be netted at 0, because the purpose of the bill is to create those adjustments from WIP into the item cost. So I'm going to click save and close. And now if I run, let me go to report, and then I go into sales by item summary. And then let's do this month and click on run. Here's my Chevy Tahoe that I sold for $9,000. And now my cost of goods sold went up and my gross margin went down, as it's supposed to do. Now let me go back to the profit and loss and show you the effects. Let me do it this month. The effects of that adjustment that we just made of the labor. So take a look at my payroll expenses is 10,000, but now you see a negative allocated payroll of 112, and the new profit and loss payroll expense account is now at 9,987 because it netted against that inventory adjustment of value. Now, where is that payroll cost going to go? Well, that eventually got transferred into cost of goods sold when we actually sold the unit. Now, let me show you the second method of doing this, which is it follows a similar principle, but I think it'll be valuable for you to kind of see both methods and then choose which one makes more sense to you. Now, let me go into new and let me go into check, and let's say I'm going to buy another vehicle from someone else. So I'm going to pick a vendor here that I have here. Let's pick Einstein Brothers, and let's say I'm gonna skip category, go straight to the item, and then I'm gonna create the actual item that I'm buying. So let's say this is a 2018 Ford Focus, and then we'll put the last 4 digits of the VIN, then go to add inventory. So we're creating the inventory part right on the initial purchase. Initial quantity is 0. As of date, let's put today's date. Okay, I'm gonna put yesterday's date on it because sometimes this messes up if you choose a date in the future. And then I'm gonna leave the asset account, income account, and cost of goods sold account be. Of course, you have your own preference if you want to give it its own accounts. I'm gonna click on save and close, and then let's say I'm paying $4,700 for this, and then we can call this one trade-in value or whatever, right? So we go ahead and enter that, and we're purchasing the core unit value there, which is 4,700. Then I'm going to click on, actually, let me bring this back a couple of days here, and then click on save and close. So there you go. So now when I go into reports and I go into balance sheet, it's not going to be using, let me do all dates again. Click on run report. It's not going to be using the WIP account anymore. As a matter of fact, that WIP account, that it's not being used anymore. Now it's going straight into inventory asset. If I click on the 4,700, I can see the history of all the transactions that have been affecting it. And I can probably group this by product. Yeah, click on run report. And then here's my Chevy Tahoe. And you can see when it was bought and when it was sold, or when it was converted and when it was sold. And if I go and see my Ford Focus, I see right here when it was bought for 4,700 on the 29th. So there you go. That's simple and easy. Now let's go back into the reports and let's pull up the valuation report. So let's do the inventory valuation summary, and let's put the 30th, click on run report, and there it is. So there's my Ford Focus at 4,700. Now this method is going to require that I'm always looking at this number, because I need to have this number handy for that, just in case something requires me to put it manually in there. So now I know that what I spent on this car so far is 4,700. Now let me go into another tab here, and let's say now I'm going to buy some parts for it. So let's go to Ford Company, and let's say we're going to write him a check for some spare parts. Now this is where it becomes uber tricky with the second method, which is you have to be moving the inventory sort of in real time in here. So what we're going to do first is we're going to enter, we're going to go down here where it says item details, and we're going to enter the first the first item, the first line item, which is going to be that Ford Focus. Now this is going to be a -1 at 4,700. And then on the second line, what we're going to do, and by the way, that 4,700 came from here. So right from the valuation report. So what I'm going to do is I'm going to take the first line, reduce the inventory, and then enter the inventory again. And we're going to increase it by the difference. So let's say, for example, we bought some parts. So we'll put here $368.90 worth of parts. So I come in here and take 4,700 plus 368.90, kind of doing the calculation on the fly here. And then you're going to see the negative of the 47, which is going to send it back and adjust it in the balance sheet, and then immediately bring it back up for the difference that I'm spending on the part. So I'll go ahead and click on Save and Close. And then I'm going to go back to my valuation report and click on Run Summary, because I need to make sure that my asset value is being calculated on the fly. I'm going to click on the asset value so you can see the history, and you can see here when we bought it for 4,700, and then when we reduced it and then increased it again by that difference. So that's why this method gets a little bit tricky, but something you can consider. So let me go back here and leave the valuation report. Let's show you another transaction. Let me go into the bill, and we can use the same vendor that I created called whip to inventory. And let's say now I want to take some of the labor that we talked about earlier. So I'm going to come in here into payroll expenses allocated costs, and then here what I'm going to do is I'm going to take, let's say, $300 worth of labor. So let's put 300 there as a negative, because I'm taking the labor away. And let's put here Mike at $30 an hour times 10 hours to paint, whatever it is. And then I'm going to go into item details here, and then I'm going to go into Ford Focus. Now I have to go back into my valuation report, see what the current value is now, 5068.90, and then manually put it here as a negative. So we'll do -1, 5068.90. Okay, and then I'm going to enter the second line, Ford Focus, and then this is going to be 5068.90 plus the $300 that we have in the top. So essentially, it's still a $0 bill. It takes the payroll away from the profit and loss and puts it into the inventory value. And then I'm taking the last known value of the inventory asset out of the books and then entering it back in with the new value. So I'm going to go ahead and click on Save and Close. Go back into my valuation report, and now I can see that my asset value keeps going up. So naturally, when it goes time to sell it, let's go ahead and invoice it, and let's pick a client here, and we'll close that, and then we'll pick the item here, Ford Focus, and let's say we're going to sell this one for $87.50, and then let's say we're going to sell this at the end of the month, and then click on Save. So now I can go back into my reports, look for sales by product summary, and then let's do end of the month here, or end of the year. Now I can see that my Ford Focus was sold for $87.50. My cost was $38.68. My gross margin and my total gross margin percent. So those are the two methods. There's two ways to do it. QuickBooks Online will work. You can follow the instructions exactly like this. With QuickBooks Desktop, the screens are different, but the concept is exactly the same. Now, this is different than manufacturing. This is different than bill of materials. This is different than building inventory assemblies. If you were selling the same product over and over and over, I wouldn't recommend this process. I would recommend actually using QuickBooks Premier or Enterprise and use the bill of materials inventory assembly workflow. But since these are individual units, so each car is going to be its own system, its own product, its own identifiable inventory, or each antique or whatever, it's going to be its own thing. When it's its own thing, every unit is its own thing, then we follow this method because it really isn't any other way. Anyway, I hope you like the process. If you need help because your situation is not as clear cut as this, my contact is somewhere in the description, and you can set up a session with myself or one of my colleagues that work in my office. Manufacturing is our specialty, and custom inventory sales like this is also our specialty. So if you need any help with that, you know where to contact us. Anyway, hope you enjoyed it, and I'll see you in the next one.